Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big video yesterday where Anthony Power and I discussed our sell or exit strategy for the Bitcoin mining stocks and some of the key lessons learned in previous cycles. Today we're going to be following that up, giving you a high-level overview of our outlook on the Bitcoin mining space and some of the key metrics that we're currently watching. In addition to that, we have some news out from Mara and Soluna Holdings, which we're going to be discussing. A lot to get through. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below your top pick in the Bitcoin mining space and why. With that being said, let's get into today's video. Hey guys, welcome back to another podcast. A big one in store for you today following yesterday's discussion on sell or exit timing in the Bitcoin mining space. Today is specifically of interest, Anthony, as it's your birthday. I know you're out hitting the links earlier today, so we wanted to wish you a happy birthday before we get into the discussion and maybe kick it off with Bitcoin price here today in the $118,000 range. It's been a very event-filled week. The ups, the downs, but looking back 5 days ago, Bitcoin virtually in the exact same spot it was to start the week. So we'll kick it off there. And again, happy birthday to you.
Thanks, Bryce. Yeah, enjoyable game of golf this morning. Getting ready for qualifying for next year's Championship Open competition. So hitting the courses with regularity now. Bitcoin price, it's, as I say, it's in that band now. That sort of 118 seems to be a fixed target. We saw it achieve 120 yesterday. All-time high is 123,000, so we're not too far away from that. Yeah, so we'll get to see what the Bitcoin price goes for the remainder of the week there, but I'm feeling comfortable in this range. It'd be nice to see a little burst above the all-time high again, but let's be patient. We've had a great rally year to date already, and even a bigger rally since the beginning of last year when the Bitcoin price was hovering around 42,000.
Yeah, the word patience once again comes up. That was one of our key takeaways from yesterday's discussion as well. Now, in terms of hash price, this has been benefiting from the increased price in Bitcoin we've seen here, currently sitting sub $60. We did see a spike last week up into the $64 range, which is a real breath of fresh air for the miners. I also have a difficulty adjustment scheduled this week on the agenda.
Yeah, I think $59 and change there. It's still a reasonable rate for a lot of these miners to to make a margin, especially the North American miners, because they're using some of the most technologically advanced mining machines. They're the most efficient machines on the market, and secondly, they're able to attract the lowest amounts of energy pricing across the globe. Really, if you look at some of the Texas miners, where they're paying around about 3 cents a kilowatt hour. And even those outside of Texas, probably towards 4 or even at the most, maybe 5 cents a kilowatt hour. So those sort of rates there, I expect them to be achieving good margins. And we'll start seeing that now as the earnings come through for quarter 2. We've got Mara earnings next week released on the 29th. We'll hopefully have the CFO on the podcast on the 30th to go into a bit of a dive on Mara at that point in time there. And then the week after, I think we've got Riot Platforms coming out, and Jason will also be on the podcast. So great to catch up with those two big miners there. Network hash rate, again, around about 900 now. It's been in this position for quite some time now. So we're not seeing an extended run on the 7-day moving average. Yes, it does spike above 1,000 exahash. We saw it drop as low as 634 exahash a few weeks ago there. But that range of sort of 800, 900 has been there for some time now. The best part of the last 12 months. So if you think about where the hash rate was really rising through 2024, we haven't seen that level of rise in 2025. And, we've talked about this. It's a challenging environment for miners. If the public miners are finding it hard, you can bet your bottom dollars a lot of miners out there that are finding it even harder, unless they're getting some really low rates of energy or stranded energy or using energy that they maybe shouldn't be using. So we know that happens in certain countries. But the majority, I mean, there's no mining in Europe because effectively, or very little mining because the rates are so high. And those that have managed to get mining in certain European countries have then felt foul of the governments changing the rates of VAT and taxation against these energy rates because they believe the Bitcoin mining isn't great for the environment, etc., etc. So it's been a real challenge. But North America, where predominantly most of the mining's done from what we cover, has had a really good, last sort of 18 months, and we'll hopefully see some really good green earnings reports as they start coming out next week. In terms of the difficulty, it looks like it's going to be flat when it changes in a couple of days' time. We had a big adjustment up at the last change. We had a massive we had a big adjustment up at the last change, and an equal reduction in difficulty to the previous fortnight. So it seems to be holding that way there. But this difficulty, 126 trillion. This is some increase, and this continues to increase. This hasn't had any. This hasn't waned at all. So the difficulty, we talked yesterday. It's like a further halving for the miners. But as I say, hash price at nearly $60. I think they can make money there, and some of the most efficient miners will start pulling away and making significant profits. Be interesting to see Cipher and to see Riot and to see IREN's earnings figures. We might have to wait a little bit longer for IREN. I think it's their full year earnings coming out, and that might be sort of end of August, beginning of September. But we'll certainly see Riot's early and see how they're managing to deliver results. Now they've got that whole of Corsicana energized, and they've managed to sort out many of the problems at Rockdale. So I'm hoping some really good figures this time. Plus the fact they've got $2 billion of Bitcoin on the balance sheet, and they'll have an FASB benefit from that. And we'll cover that in a little bit later in the podcast.
Yeah, nice update there, Anthony. And speaking of Mara, as you mentioned, we'll get into some of this market cap HODL valuation in a second here. They've actually come out with news this morning supporting that strategy, looking to acquire more Bitcoin and general purposes, $850 million.
Yeah, absolutely. I think this is their third big convertible note in the last sort of 12 months. They had a couple of big ones before the new year, and this is another one. And like you say there, 850 with the potential of another 150 within the 13-day closing period. So that'll probably be $1 billion of convertible note. You're quite right. Some of it's to buy Bitcoin. Some of it's to pay off one of the previous convertible notes, i.e. 50 million of the 1% convertible note, which was due to be converted in 2026. So reducing that amount of debt there. Also, that they're doing what a lot of the other miners are doing with convertible notes. They're putting a cap call as well. So maybe you can just briefly explain what that is to the audience.
Yeah, so essentially this is a 0% convertible note. So they're using a portion of that to pay back the 1% convertible due next year, Anthony. This one's due in 2032, but they have decided to use a capped call similar to what we've seen with some of these other large convertible notes. So essentially limiting the dilution or potential dilution of shares down the road based on share price movement. So a portion of these funds will be used to set up that cap call transaction. We've talked about the impact of that on these stocks and some of the short-term versus long-term trading activity that goes along with this strategy, but it seems to be kind of the standard now for any of these sizable raises.
Yeah, absolutely. And more information will come out over the next day or so with regards to the conversion rates, etc., etc. And as I say, we'll hopefully get Salman, the CFO, on the podcast next week and maybe talk a little bit more about this particular convertible note and also about their strategy and direction as they move forward to the rest of the year.
Most definitely. Now we have one more news update before we get into this overview or summary of the Bitcoin mining space. You've brought along a number of your updated tables and charts, Anthony, some great data. And as you say, specifically relevant now as we go into earnings period here, where a lot of these miners expected to put up some big numbers. Now, Soluna Holdings, we've been getting a lot of updates out from them. Today coming out with a very positive development, securing $20 million worth of funding from Spring Lane Capital. This is an ongoing relationship between these two companies. They've worked with Spring Lane in the past, going towards Caddy 1.
Yeah, so we know that Soluna recently did a dilution to raise some more capital. Here they are now securing that 20 million from Spring Lane. for Project Catty 1, which is a 35 megawatt project in Texas. This is going to support 12,000 of the next gen Bitcoin miners, so some of the most efficient miners. And we know Soluna, a lot of their pipeline, they have some significantly low energy costs. So, once these projects are actually up and running, and they're in a project share, obviously, because the capital is generally coming from a third party. So they do a project share on these projects. And if you can get low energy and most efficient miners, you're in a win-win-win position there. So we'll start hopefully seeing some of their funds. Now, the construction for this begins in Q3 2025. And energization is expected to happen within the 6 months of that. So by the end of Q1 2026, and then we'll start seeing revenues come into their earnings probably towards the end of Q2 next year. So maybe just over a year from now. But they have a significant number of projects. We've talked about Dorothy 2 coming online. They've got other projects as well in the pipeline, and I saw some further names, new names appearing on their project sheet last week when they made some more announcements. But a good update from Soluna. Hopefully, their revenues and cash flow can start helping them get to where they need to be over this next 12 months.
Certainly. And we asked John if those are names of his ex-girlfriends or what those names were, Anthony. They're actually famous female scientists or innovators in the space. So nice to pay some homage to pioneers in that sector as well. Now, we wanted to get into the meat and potatoes of the discussion here, really talking about what we're seeing in the Bitcoin mining sector, some of the key metrics that we're watching, and the trends that are evolving in this space. So we talked about a few of these yesterday, but two of the big trends we've seen, Anthony, are really the emergence of Ethereum treasury or strategy companies. We've got the list here. You can see a couple names, Bit Digital, BTCS, also IntChains Group that we've covered on the channel a number of times. We're also seeing Bitcoin treasury companies popping up like crazy. We've got a list here of the top 100. This isn't the same list as HODL 15, so there will be a few differences. However, you do see in the top 10 here some new names into the club, actually pushing down a few regulars on the channel. So interesting to see these strategies evolve. I wanted to get your thoughts here. Then we'll move into the Bitcoin mining side of things.
Yeah, I mean, the Ethereum's, that's been sort of a very more recent strategy that's been utilized there. We know that Sam Tabar, the CEO of Bit Digital, they've been staking their Ethereum for well over 18 months now, ever since we started covering them on the Power Mining Analysis platform. And but we've seen a lot more in the last few weeks starting this process. And if you look at Bit Digital, go back just over a month ago, they only had 24,000 Ethereum in their treasury, and today 120,000 in their treasury. That's an increase of 100,000 Ethereum over a short period of time. And we've talked about how they've increased that Ethereum there. But yeah, this seems to be getting more and more of the norm now. I think obviously when the Bitcoin treasury management companies came out and we saw some really massive rises. I mean, the Smarter Web company was a very small UK company listed on the London Stock Exchange and or the Aquis Stock Exchange, and it was only valued at about, I think it was valued at probably about £5 million. Well, today it's the most valuable company on that exchange, and at one point in the last month or so, it was over £1 billion in value, and their strategy just changed to the fact that they started to buy Bitcoin with their capital reserves, and as the share price increased, it gave them an opportunity to sell more shares as the price increased and use the funds of those shares to rebuy Bitcoin, and they've done that, and they've grown from initially 2 or 3 Bitcoin to having 1,600 Bitcoin on the balance sheet in a very short space of time. Now that Bitcoin, if you look at today's valuation, probably about 200 million in terms of valuation there. But if you look at the valuation of the company today, and it has pulled back a bit, it's probably over 600 or 700 million pounds. So they're getting a real premium for that. And I think those sorts of stories have given the impetus to other companies. And now we're not only seeing Ethereum treasury management companies, we're seeing some other companies come out with other crypto coins and trying to do it that way there. So I think this is just the sort of the tip of the iceberg. I think this next few months we'll start seeing more and more come out there. I don't really know how long it's gonna last. I don't know really I mean, it was great to see obviously strategy initially with obviously the size of what they've been doing over the last 5 years, and we've seen a number of these other companies go in there. The likes of Metaplanet have done that, and there's a few other new entrants. Again, in the Bitcoin treasury management area that are growing massively and rapidly. But it seems to be, you're quite right, it seems to be one popping up on a daily basis at the moment.
Yeah, it's sure interesting to see more and more companies come into this space. And realistically, as they say, a rising tide lifts all ships. This is great for the Bitcoin miners in the sense that it supports the purchase of Bitcoin on the open market, or the price of Bitcoin, which in turn then helps out the hash price, as we just talked about. So we've looked at some of these high level kind of trends we're seeing in the space. Now, if we narrow in on the Bitcoin miners, you made reference earlier to Bitcoin price, the miners themselves having a tough day. The two we just talked about, Soluna and Mara, unfortunately at the bottom of the list here, you can see Canaan, the only one in green. We did do a coverage on them a few weeks back, but overall today, Anthony, the miners showing that volatility that we've talked about extensively on the channel.
Yeah, and Mara's already at its 3 month average in terms of volume, and that's literally a couple of hours after the market opened. So, market sometimes, take a negative outlook at convertible notes and dilution, and when we come on to the table that highlights HODL, we'll talk more about how the market are valuing Bitcoin from my perspective rather than from a treasury management company. But yeah, a lot of red on there. And actually, I looked at this earlier, and I think some of these miners have had some great moves in the last few days. So just maybe a little bit of pullback there. I mean, look at Bitfarms there, down today 4.8%, but yesterday they were the star of the show there, up sort of 17, 18% at one point. And in early hours again today, they were significant. I think the share price was at 144. So you can see a pullback from there to 126. And actually, basically lost a lot of the early morning pre-market gains. So it doesn't look as bad, but people had an opportunity in pre-market to sell at a lot higher price than it is now. But I think they're looking really well. The podcast yesterday talked about their sites, and I think maybe we'll get some news out that they may be able to land a client in the near future in Pennsylvania. So waiting to hear from that there. You're quite right, Mara, Soluna down today, but both those companies have had some good gains in the last few days. So maybe a little bit of pullback there as well, and the news just adding to that.
Yeah, potentially some profit taking. So in terms of what we're watching in the Bitcoin space, or the key metrics we're keeping an eye on going in to earnings period here, obviously share price important. We've talked about the daily here, but if we look at your chart, Anthony, on the 5-day or the 1 month, quite a different story. The 5 days essentially split. The 1 month is green across the board. So as you rightly say, the miners have been on a run here, potentially some profit taking. Another thing we've seen moving around a lot in this space is market cap. So if we zoom in on what we call the $1 billion club here, you'll see MicroStrategy or strategy up top. But in terms of the Bitcoin miners, we've seen a ton of movement in this sector as well. Mara generally holding out that top spot, but we've seen Bitdeer, CleanSpark, Riot, IREN, all sorts of movement in that second, third, fourth position. So I wanted to get your thoughts on the market cap here, specifically keeping in mind what we just talked about with that Bitcoin percent HODL, and the table we'll come on to in a second here.
Yeah, I mean, we see more and more companies get above that $1 billion mark. In fact, Bitfarms were above that $1 billion mark probably later last year, and that's pulled back again there. But they've had a bit of a rise. They're back up to 700 million there. Bit Digital were in the $1 billion club a couple of weeks ago as well. Just after Sam Tabar started buying stock there, the share price went over $4. That's had a little bit of a pullback as well. But then you've got effectively a group are in the $2 billion plus dollar mark. Now this, the top there, Marathon's held that top position really for the last 4 or 5 years. They've been, number one in terms of the growth because they've grown hash rate. They were a first miner to go onto the NASDAQ and benefit from raising capital before, well, them and Riot at the same time, but before every other miner was able to raise capital. And so they set the standard for that. And bear in mind, their market capitalization in 2021 was about 8 billion at one point. So even today's valuation at just over 6.2 billion, still be behind where it was 4 years ago. And they had a fraction of the hash rate at that point in time and no sites. It was all effectively asset light. Riot's above 5 billion today. IREN was above 5 billion last week. So that tells you that some of these other mining companies are catching up to Mara, and it all depends now on what we see on news on a daily basis. We know there's a lot of interest in IREN at the moment. They seem to be the most positive miner out there in the social media land, and the retail and institutions, do like them. They're growing their portfolio of miners using, IREN shares in there. We've seen a lot of interest in that there from some of the big investment companies. And then you've got the likes of Bitdeer as well. Bitdeer, over a year ago were less than $1 billion. They grew to 4 billion, bounced back a bit down to 2 billion, but they're growing again now. As soon as we start seeing that Seal Miner 3 come out at 10 joules a terahash, I think there'll be a lot of interest there. And if they don't sell them, what they're going to do with them? They're going to put them in their own sites and mine Bitcoin. So, looking forward to either of those strategies, either make great margins or great margins mining. It's a win-win for them. Core Scientific we'll talk about in a second. Still waiting to find if the shareholders and institutions are going to accept that deal. And CleanSpark, well, they were over 4 billion last March. So again, a lot of these companies, have been in that sort of top five, vying for sort of second place behind Mara. It's been interchanging quite a lot in the last sort of 12 months. I think the gap's closing now. I think with Mara on 58 exahash and 2 miners on 50, I think it's there for the taking, and we'll see some, maybe if one piece news comes out in the next few weeks, and the anticipation of that we might see there. And don't forget Cipher Mining. Cipher Mining's also got a great opportunity. If they have an announcement, that market capitalization will certainly go from where it is at the moment.
Yeah, definitely interested to watch Cipher over the next few weeks as we're hearing rumors about a potential deal, hyperscaler with Meta potentially. So that one will be interesting to watch. Again, big impact or potential impact on market cap. Now you talk about Mara having the highest market cap. I wanted to transition over to Core Scientific because they just got a purchase offer, buyout offer from CoreWeave at $9 billion, Anthony. So if that was to go through, that would actually exceed the Mara market cap or put them at the top of this category. However, as we see on your table here, another great example of how quickly market cap or valuation can change. The current market cap of Core Scientific, nowhere close to that initial offer.
No, and when the deal was sort of signed by the directors to go, as it goes then before shareholders, the deal itself was effectively $9 billion of CoreWeave shares, but the CoreWeave shares, it's a fixed price. So if the price of CoreWeave changes between now and when the deal gets formalized, and that's the level of what Core Scientific will have. Now, at the day it was signed, CoreWeave shares were around about $165. That gave the valuation $9 billion. If we go forward today, which is literally a few weeks after that agreement, CoreWeave shares are down $127 a share, and that gives that deal now an indicative value of about just under $7 billion. So there's $2 billion wiped off that deal in the space of 2 weeks. And that indicative price to Core Scientific shareholders is about $15.75. Now, the share price stays at $13.46 as we speak on the podcast. And so maybe there's a little bit of upside there, but we don't know what's going to happen between now and the timing, which is expected to be in Q4 for when the shareholders agree this. It really all depends on what the core share price is at the time. So shareholders have the opportunity to vote how they feel they are, but that deal before the signing looked a really, really strong deal. Lots of profits each year for the next 22 years. So I'm hoping that the CoreWeave share price will gain some volatility before then, and upward volatility, and the Core Scientific shareholders will be given what they're expecting to be given in terms of a really good deal.
Yeah, me too. And we've talked about the fact that a large portion, 83% of those CoreWeave shares are locked up by pre-IPO investors. Keep in mind, this was a private company when that Core Scientific deal was signed. So that could help us up until the lockup period, as there's not a lot of free shares available if there's buying pressure. However, after that lockup period, as we discussed extensively on a few podcasts, Anthony, it's expected a lot of those initial investors may sell. So we'll continue to watch that, but a perfect case in point example of why we pay such close attention to market cap on the channel here. Now, another tailwind we're seeing for the sector, specifically talking about HPC AI deals out from the White House and AI action plan. So We'll get more details on this, potentially do a podcast covering this next week, but we wanted to bring it up in the conversation because this is the kind of news that really sparks interest in the sector, helps that re-rate we've talked about on the channel, and really drives the narrative around the Cipher, the CORWV, the G42, some of these deals that we're seeing in the space.
Yeah, absolutely. And as you say, we'll probably cover as more and more of this information comes out. We'll probably spend a podcast to go through it, probably next week or so.
So now, with that being said, a few other metrics we like to keep an eye on. One related to HODL market cap here. We've updated this table a number of times. We've been forced to based on the purchasing. We talked about Marathon's expected purchase and the intro there. This table is interesting though, Anthony, based on those other treasury companies we discussed earlier in the conversation, the MNAV, the premium that they're being given on their Bitcoin or even Ethereum. We're just not seeing that in the Bitcoin mining space. And as we look at those market caps, very difficult to dissect what component or some of the parts is attributed to the sites versus the machines versus the AI potential versus the HODL. We've tried to break that down in prior podcasts, but you can see definitely the Bitcoin on balance sheet is not being given that same X factor potentially.
No, you can't. And give you the perfect example is if you go down to IREN's market capitalization, they haven't got a Bitcoin on the balance sheet. So their market capitalization today, $4.46 billion. So that really is a valuation based on sites, mining machines, data centers, and power. Really important. Power, they get a valuation for power. Now, all these other miners have, to some extent, very similar data centers, power, machines, but a lot of them also have Bitcoin in terms of, a HODL in place there. So you look at Mara Holdings, their Bitcoin is over 50,000, but at the last time they announced they reached 50,000. Their HODL to market cap today is nearly 95%. So they're getting no benefit whatsoever for the 300,000 machines that they hold. All of the sort of 70% of the sites that they're in are actually owned by Mara. And the power assets that they have potentially going forward now to deliver, the expectation getting to 75 exahash, that's not given as much of a valuation either because it's quite straightforward. You can value Bitcoin because Bitcoin has a price. So that's very easy to do that. So the valuation of the HODL is where it is. But when you look at the likes of other companies like the Strategy, which hasn't got any other assets effectively, they've got a small software company, so they'll have a few buildings and a few machines, but it'd be very small. But they're giving nearly twice as much value for the Bitcoin that they hold on the balance sheet. And so these companies, the mining companies, aren't. And maybe the market's saying, well, we can value Strategy at that level, but we find that it's difficult to value the Bitcoin miners because we're not 100% understand. I suppose understanding is the correct word. Understanding the industry that's in there and how these miners are able to make profits.
Yeah, nice point and a good metric to watch here. We definitely think there's an oversight by the general market or value here, not to mention the potential for this AI HPC and the strength we're seeing out of the Trump administration there. So two huge secular tailwinds here with AI HPC and Bitcoin or financial adoption of Bitcoin. And again, just not lining up for the Bitcoin miners. Now, another metric we're watching closely here, we'll shift over to the website, the live miner margin. I take my hat off to you, Anthony. These are some great numbers. We can go on, check in real time. We've fact checked, so to speak, these number of times based on prior earnings. They seem to be extremely accurate. So based on these numbers, and as you discussed in the hash price component of today's podcast, starting to see some really healthy gross margins out of the mining space.
Yeah, absolutely. And effectively, the data comes from the mining companies. We don't make up the data. They tell us what their energy price is. They tell us what their efficiency is. In fact, a lot of them include this in their updates. And so by having those numbers, you can start to calculate what the energy costs are going to be to mine a Bitcoin. And we know from their monthly updates how many Bitcoin they're mining. So you have revenues and then you also have the energy costs. And from those two numbers, you can get a gross margin. So it's not totally rocket science, but what it does is it then sort of like when the earnings come out and we do a comparison, we can then turn around and say, well, actually, you've got this presentation slide there that says you're paying this amount per kilowatt hour, but actually your earnings suggest that it's a different number. So we can then delve into as to why that changes. Why is there a difference in margins through this exercise, which is a very, very straightforward exercise. It's not difficult. We know what the hash price is, so we can calculate revenues. Obviously, IREN have the lowest energy and the most efficient fleet, and you can see that their margin at 77.4% is really good. Cipher also have very, very low energy. Now, whether they've got that 2.7 cents a kilowatt hour across their whole fleet, we'll get to see that in the next earnings slide there. But they have a reasonably good efficiency as well, 18.9. Anything under 20 at the moment is top tier in terms of efficiency. But it does change. I mean, if you look at the likes of Hive, they're paying over 5 cents a kilowatt hour. So it does impact the margins really much. Even a couple of cents. We talked about, what miners in North America are doing. Outside, I mean, 5.5% in Europe would be brilliant, but that's nowhere near what you'd be paying there. You'd be paying 6, 7, 8 cents in some of the Scandinavian countries because of these taxes they apply to it. But there is a difference there. Riot have the similar to IREN because they're in similar locations. They have a PPA, I think it's around about 3.9 cents, but they have 400 megawatts at Corsicana. That's on the market rate. So that'll be achieving the same as Childers effectively. And their margins are just under 70% there. Mara have indicated from their presentation they're able to achieve about 3.7 cents. Now, whether that includes the hosting fee for some of the sites that they're not able to own, that might make their margin slightly less there. But if they're able to achieve that on the sites that they control, that's a significant increase. And again, their earnings come out next week. So these are sort of questions we'll be asking Salman as to, margins, operating margins, and are they now able to mine profitably, taking account of all the costs in the company? And we'll get more information on that next week.
Yeah, we certainly will. So data, and more data. Now, the final table we have for you guys, the miner valuation. Again, just wanted to highlight this one as it's something available on the website, updated in real time, but a great resource if you're out there, you're trying to do some due diligence on the miners. There's a number of these type of tables on the site, but another one that we rarely talk about on the channel here.
Yeah, absolutely. And it's just a few more metrics that people like to see. So we've put them into one space here. So we talk about enterprise value and compare that to the hash rate. So if you look at the enterprise value for the company, how much hash rate they've got, and effectively here, the lower numbers, the better number. It doesn't happen to some people have come out there and said, oh, it's great. It's a $200 per, it doesn't know. No, it's the other way around. If you can get it for as low as possible, it's a cost valuation. So the lower number, the better there. Bear in mind, you have to remember some of these companies are now starting to utilize power in HPC. So this accounts really of the enterprise value of the whole company and doesn't apportion any of their valuation towards HPC for those companies that are really big into it. So Core Scientific would be quite high here, but actually, when you think about how much power they're directing to HPC and took that away from their valuation, that number would be significantly lower there. So, as I say, take these metrics with a pinch of salt there. The current ratio is effectively from the financial statements. How much is their current assets? How much is their current liabilities? Do they have enough assets over the next 12 months to meet their 12 months liabilities? So anything above 1 is a good indicator. It doesn't always have to be 1, because if there's a fast turnover of cash flow in a yearly period, like say supermarkets, they don't always have to have above 1 in the current ratio, because they're churning over millions and millions of tins of beans on a daily basis. So they're small margins and selling lots of tins there. So the cash flow really works for them as well there. Miners will be in the same position there. And then you've got enterprise value to net assets. That also gives you an indication there of how much are you getting for your dollar that you're investing in terms of there. So anything, the higher that obviously that one there, the better. Anything over 1 is great. You're getting more than the valuation. So if you're investing a dollar in the company, you're getting more than a dollar valuation. And then debt to equity ratio, as it says there, how much debt on the balance sheet compared to the total shareholder value on the balance sheet there. So, you want to try and keep that percentage as low as possible there. But we're not saying debt's bad. when you're getting 0% convertible notes to raise capital to build facilities or to buy Bitcoin, that's very, very cheap debt. So, rather than go out there and get a loan like we saw miners a couple of years ago, 10, 15% a year in interest payments, there is cheap debt out there. So, again, do your due diligence on all these metrics there. Don't just take them at face value. There are reasons for some of the numbers on there. So you have to do a little bit more due diligence as you go along.
Certainly do. So there you go. A nice little overview of the Bitcoin mining space, some of the key metrics, data, updated tables for you guys to do your due diligence going into earnings period here. Let us know in the comments section below which of these companies you're most excited about or anticipate to do the best this round of earnings. We'd love to hear from you. Hit the like button. Feel free to subscribe, and we'll see you back here tomorrow.